Hello everyone, my name is Romy Acosta. I am Head of Investor Relations of JOST Werke SE. And today I want to give you a quick overview about our results for the second quarter of 2024. The industries in which JOST is active, which are the truck and trailer industry for transport and the agricultural industry, are especially in Europe and North America affected by a cyclical decline after 3 very strong years in the years 21 until 2023. And we are already seeing that in the top line development, both in Europe and in North America. Organic sales decline in Europe by 17% and by 22% in North America. Europe was supported by 2 acquisitions that we did last year that contributed 20 million euros revenues to the European market. And in Asia Pacific, Africa, we did see a stable market overall. There was a certain decline in India, given the uncertainties around the elections that took place in the second quarter of the year. But that was, for the most part, compensated by a strong demand in China, which went especially to the export market for trucks and trailers. So overall, we saw a certain decline in the regions. However, despite this cyclical decline, JOST was able to maintain the overall profitability in the group, although there were certain shifts in the regions. Europe, which is the region that contains the headquarter, the cost, has much higher SG&A costs and a higher proportion of fixed costs. That region was more affected by the decline in sales, whereas in North America, we saw a very strong increase in the profitability as well as in the adjusted EBIT. That was driven by a couple of factors that helped the North American region. First of all, a very favorable product mix, with especially for the agricultural business, we saw a very strong increase in the demand for premium loaders for the professional agricultural business, which come at a much higher margin. Also, we had introduced at the end of last year a lot of efficiency increases measures as well as portfolio optimization that right now are in full, have developed completely, and we are seeing the full effect in the second quarter, as well as a very favorable cost of material made for the region as well. So we saw here a jump in profitability for 10.5% to 17.4%. Asia Pacific Africa region, margin declined slightly from 20% to 18%. This was mostly due to the shift that we saw from India towards China, because especially in China, our main focus in products are on-highway business, which comes at a lower margin than the off-highway infrastructure products that we tend to sell in the Indian market as well as in the Pacific and Africa region. But overall, for the group, and you see the development here, the margin remained strong at 11.3%. You see that in the bottom side of the graphic, despite the decline in sales. So adjusted EBIT was down to 34 million following the sales development. We saw a growth in the agriculture business by 19% compared to prior year. However, that was, as I mentioned before, supported by the acquisition effects of the 2 companies that we acquired last year. Organically, cultural business went down by 11% and the transport business by 17%. But overall, very strong profitability, showing the resilience of the business, supported by a very good development of aftermarket, which always tends to happen with the markets are down. And also the global spread of JOST and our global footprint help us to sort of offset the developments in the regions, with a very strong North America compensating for the volume decline in Europe. So overall, very good results. We are very happy to have been able to maintain the margins that we achieved last year. We also achieved a ROCE of 20%, showing a very strong shareholder value, and the leverage remained below the 1x EBITDA mark. Despite having paid 22 million in dividend in the second quarter of the year, free cash flow also developed very positively, growing to 61 million euro. And the cash conversion rate, which is defined for JOST as free cash flow ratio to adjusted net income, was at 1.3 times, also higher than the 1 time that we always aim for. Adjusted EPS, earnings per share, was at €3.07 in the first half of the year, and adjusted net earnings to sales ratio remained high at almost 8%. So with this development that we've achieved so far, and looking at the remainder of the year and what we expect for the markets, we have confirmed our outlook. We still expect, as announced at the beginning, a single-digit decline in sales given the cyclical downturn in the margins, but we expect that adjusted EBIT will also decline in line with sales, and slightly faster pace, but not too much. That would lead to a slight decline in the adjusted EBIT margin, but it should remain stable on the upper half of our strategic corridor of 10 to 11.5% adjusted EBIT margin target. And CapEx are around 2.5% to 2.9% of sales. And the working capital also should remain below the 19% threshold. And we've confirmed this guidance. If you want to learn more about JOST and our results in more detail, you can always go to our webpage or reach out to me directly. Thank you very much for your attention.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.